focus on the right things in trading. So the first thing is after you have your model, you have to have a trade model going into trading. And if you've not done that, you have to focus on getting that trade model by back testing, by sitting in front of the chart for hours and hours. And once you've done that, you're going to trade journal at least these 5 things here. Number one is the timing, time of week, time of month, time of day, time of session. Trade location is everything. I did a video on that. That mitigates a lot of risk. So you're journaling the timing of when you took a trade, you're journaling the location, and then the modest leverage. How much leverage are you using? In the prop industry, it's all about getting stuff now and people taking huge risk. But for longevity, and if you want to build a track record and to track maybe in potential investors that want to invest with you, in you, because of your performance on a risk adjusted basis, it comes down to what's your leverage? And modest leverage is going to always be better than overextending yourself. Patience, did a video on that. Got to have patience to let this thing play out, to take profit or your stop, whether it's a time stop or a price stop. And then last but not least, you're focusing on your trading, not on dollars, but on ROI percentage performance, because that's what the pros do. When pros manage millions and millions of dollars on the commercial side, whether it's a hedge fund, a mutual fund, they're looking for absolute and relative ROI percentage performance. What did you earn for the day? What did your year to date look like? What was the month? What was the week? So you focus on that. You don't focus on the Lambos and the dollars. Invest in your trading success for 2025 with Coach Craig. Improve on your trade model execution. Maybe you don't have a trade model and you need to get one, or you need to refine it, remodel it. One-to-one coaching sessions. That's not done. Mostly it's group coaching that's marketed out there on the internet. This is one-to-one coaching, trade accountability partner. 3 months to 6 months, you have an accountability partner focused on what you need to accomplish. 5 elements to focus on. These are some of the things that we coach on. See more details in the description. First trade of 2025%, 1.59% ROI. Going to show you how I did it, what I was looking at. So the first thing is time of day. This is minutes after the Globex Open. And what we had on New Year's Eve was a pretty steep decline. And I'm looking at the 1 hour chart and I'm looking at the open, and the first tell is showing up New Year's Day minutes after the Globex Open. Most people aren't going to be ready to take a trade, but that's the first step in performance success, is always be aware of market hours and what happens. I don't usually trade Asia, especially Asia Open, but the idea here is we had major signs, and the first sign was new day open gap. We had an 8.7 handle new day open gap. That is very wide. You can see here, I've marked that off, and I'll carry this forward for the year, the month, the week, the day. This is a very important level. Now, remember, this is Asia, so the regular trading hours, New York's not there. I don't have any information, but this is a 1 hour. What I do have is a Bollinger Band, and Bollinger Bands, you can't see the top here, but what we've got is widening Bollinger Bands and this middle Bollinger Band pointing down, and you see this spike that we went above the new day open gap, and we hit the Bollinger Band and we retreated. And that's where I initiated the short sale, because my thinking was we've already explored lower Bollinger Band in 2024, the last hours, and then we still have a downsloping middle Bollinger Band, and I'm looking at this red area. This was the sell side liquidity area. So I opened 59, 51, 50 with this purple line, and that is everything, location and time. And then the time was minutes, between 5 and 15 minutes. I did 2 legs, and I did it with low leverage, 20, 25% of a full trade only. So I could totally be patient. So leverage was low, timing was crucial, and the tell was the new day open gap. And the placement of the location was just below the middle Bollinger, pointing down, and above 4.5 handles above this new day open gap. So I really liked what I had here. Now, the goal was, could we make a stab at the first of the year for this red area? And I was definitely thinking, I'm just going to hold this all the way into New York and wait for this to hit. I wasn't aware we were going to hit this. It took only 1 hour and 19 minutes after the Globex opened to get 59.8 on the price. So that was my finish. No, I didn't get the absolute bottom, and I don't have to, because this was a 33 handle take profit. And that's a 1.59% net asset value increase right at the beginning of the year. So that's important. It's not the dollars, it's the ROI. If you focus as a trader on ROI percentage, you're going to beat mostly the S&P 500 and other things if you have a trading edge. And that was my goal for the first of the year. So that's the breakdown on the first trade. So let's go to the charts on what's happening with price action. Daily charts, Bitcoin on the left, S&P 500 in the middle, and the NASDAQ. So I want to go right to the S&P daily candles. And you notice here, 1 lower Bollinger Band, 2 lower Bollinger Band, 3. So this is the start of the year right here. We go almost to the 9 EMA on the top, and this is the low. We pierced that lower Bollinger Band, really extraordinarily good range. And that's what made a great trading day. I was very active because look how much more range this candle wick and body, both the premium wick, a discount wick, and the candle body had over the prior day, New Year's Eve. Where are we now? We're hovering right now above where the low Bollinger Band is. And where does that sit? That sits at 58.7627. And the 3 EMA is just above us at 59.3475. And the 9 EMA is 59.84. So that is very important that we look at the Bollingers on a daily chart to kind of see. More or less, the NASDAQ on the right's doing the same thing, and Bitcoin totally has changed now to be the leader. So this is definitely strong because we only really had one dip into the lower Bollinger Band, and that was 3 days ago. So you can see here we were the first day of the year. We almost got to the middle Bollinger Band, which would be a 98.933. And I think this is still bullish here for sure going into 2025. This does not look bearish at all. But to really get acceleration and escape velocity, we want to clear that middle Bollinger. The equity indices, not so much yet. We're still in a discount because middle Bollinger on the S&Ps is 6056. So that's a ways above compared to where we're at right now. Next chart. What we need to look at is the US dollar, the VIX for volatility, and the treasury yields on the 10-year. So I'll start with the dollar because when you look at the Fed day last December, we had this daily fair value gap. We're way above it on the dollar. So this first day of the new year, look at that. We cleared the 109. We talked about that in the prior video. So right now you see we're going a little bit lower right now with the very small stubby black candle for the 3rd of January, Friday. We'll see how we close, but I'm imagining this is going to be potentially another fair value gap because of the January 2nd large candle. It's an inverse relationship. High dollar, it's going to be a drag on US equity indices. Of course, it doesn't seem to be pulling down Bitcoin at this point. The VIX volatility inside of this fair value gap, and again, all fair value gaps started on the 18th of last month for the FOMC. You can see here we're flirting with the idea of getting above the red line in this yellow rectangle, which would be consequent encroachment. But we're not breaking out of this rectangle. So again, we need a volatility event here. We're on a Friday. I'm not necessarily seeing that happen here on a Friday. Treasury yields on the right, you can see we've just flagged. We're not really going up or down, but we're maintaining, and we do have escape velocity distance from the fair value gap from the 18th. So we're holding high yields. So currently a 4.544 10-year treasury yield. Remember, the Fed's going the wrong way at this point because they telegraphed and went ahead and took action by lowering, and the treasury yield on the 10 years said, we're not having it. So this remains, for me, the canary in the coal mine is these 3 things on if I'm going to be bullish or bearish. For sure, this is going to be a major element in my bias on equity indices. And right now, I'm not a raging bull at all on equity indices so far because of what we've got on the dollar, what we've got on the yield, and all we need is a very big spike here in volatility, and we could see the equity indices further retrace lower. Next chart. Okay, on the right, 4-hour S&P 500 futures with Bollinger Bands. So on this right chart, we've got sloping down middle Bollinger Band. And notice how the Bollinger Bands on the green lower, the red upper are more or less narrowing, compressing. So I'm not real impressed here that we have no escape velocity off of the lower Bollinger Bands. So you see it here, you see it here, you see it here. So we've had 3 pushes down here since the 27th, 28th. And right now, what I'm thinking is we still could hit down here on the 5900s. The next chart I show after this chart sequence will go down lower to where I think a potential low would be for Friday. But that's where we stand on the 4-hour with the Bollinger Band. This is not giving me enough information just to trade off it, but I like to look at the higher time frame. On the left, this is very interesting. This is the Renko chart with the Keltner, and you can see we're above the middle here. So if we're above and trending up towards the upper Keltner, which is 59, 56, 30, my question is, why is this not popping a little bit more on the 4-hour? So you got to take this with a grain of salt. This is a little bit more of in combination with the short-term chart. So I go on a 1-hour here on the right. Now that's a different story. I'll blow this up. Here you see a real clear rejection on the right side, and I like this a little bit better. So the 1-hour on the right, the Renko on the left, and again, 59.56, that would be flirting with the buy side liquidity right here. 59.60 is buy side liquidity on this 1-hour chart. Low is right here, and that low comes in 58.74.25, 74.75, excuse me. So that was the low. So these are 2 charts I'm going to pay attention to. I like on the 1-hour how the Bollinger Bands are really wide here. So that's good. If they were really compressed, that would bother me because that would mean a potential breakout going higher or lower. And you can never predict a breakout. But with a real wide stance here, it's going to really take a lot for the current price of 59.27 to jam job up here to 59.98. So 6,000 is up here on upper Bollinger Band, but I'm thinking if this flags, these things could compress. So I looked at the smaller time frame charts and I just didn't like the perspective. I'm going to stick with the 1 hour here, but I'm going to point out the zones of interest that I have. This gray rectangle down here was the previous day's open range in the afternoon. We would be breaking this dash line of 5,900 to hit that. Inside of that gray rectangle, I've got a daily volume imbalance. So the prior low of the day did pierce it with a discount candle wick. You can see here again, the low prior day, 58.74.75, and I've got this red rectangle. So for me, I think potentially we've got a low between 5,900 and the top of this gray rectangle. And if I've got a runner short, I like to do business and take profit around this area. As far as adding anything for shorts, I don't like to do any volume or size at this level. It'd have to get to these higher levels. The trade of the day came from the prior day for me at the 73.50 zone area. This is where we really broke hard with a solid candle body around that silver bullet hour. And then you could see here we had a big candle down. This was the noon hour. So we really haven't repaired the damage, but I do like to note if we are in New York time, not pre-market like we are right now. We're not even in London yet. This first present fair value gap on the 1 minute, this was fairly large. So that's an area of interest. That's 59.59 and change on the lower portion of that. And of course, the new day open gap. So that's confluent with this middle Bollinger Band. That's why I like that 1 hour, because there's a lot of confluence levels here. So again, if I was going to take action on a short, I'd like to see price above the Bollinger Band on the middle and in or higher on this middle new day open gap. Again, I'm going to keep this for many moons on the charts just because it's the first of the year of a brand new year. Up above, January 2nd, RTH open was 59.67.75. So all these areas that are real key are well above where we're at right now in Globex. And I think the reason we don't see the spike in Globex is everybody's hung over from the new year. Not everybody's back. And we did have a really strong displacement, and leads me to believe maybe we have one more dip lower on a Friday before then we smack everybody around and go back to where these levels are. So that's a theory on the narrative. Very light right now, not doing anything because the prior day was such a good day for me. I've learned don't push it after a big win or a big loss the day after. And Fridays are never statistically high probability days for me. So I'm taking it super slow, capital preservation. That's what it's all about on a Friday. Paycheck already went out on Thursday. So I don't need to take undue risk unless I see location, just like real estate, and time of day. So the London, I'll take a look, and then the Silver Bullet AM. Not interested in anything that happens in the afternoon. That's a wrap for this video for Friday. Again, we'll see what Globex does. I want to thank all the subscribers and everybody that's new to the channel. Thank you so much for your support. And if you've made it this far, congrats. You're a real one. Take care and aloha. Bye.